Hello, welcome to my very first video on YouTube. So this is a new experience for me, hopefully as much as for you. Um, so I've watched a lot of YouTube videos of these people, how they invest money into these companies and they get these dividends and live happily ever after some time, after investing uh, into these stocks and getting their dividends and whatnot, and reinvesting that money in general. So who am I? Obviously I'm not any kind of a stock trader. Just a regular boy. I do project management for a software company, and I wanted to try this out, right? I want to see if I can actually repeat what all these other YouTubers seem to be doing. Um, and I'm having a hard time, accepting the fact that they're actually doing it as quickly and as well as they are. So here I am, the regular guy, like all of you, trying to do this to see if this is gonna work. And so I guess for the first video, this is really just going to be who I am and what I'm trying to achieve. But as you can see, I picked software called M1 Financing, and they're pretty much free to use, to trade, to buy stocks, to sell stocks. They do have some pay for services, but I don't think I'll be using those, at least not at this point, since all I'm going to be doing is pretty much just investing into this portfolio and doing some research and buying whatever stocks offer best dividends at some point. Um, so so that's basically what I'm trying to do is see if I can in some time. I'm not sure how long it's going to take me, probably a year or so, maybe more, depending on how much money I have available to invest into this. But trying to see if I can get to that point where these stocks will pay me enough dividends to to at least afford some fun on the side besides my paycheck, if not live independently um, off of my paycheck, I guess, just live off of the dividends. So we'll see how that's going to go. But in the meantime, how will I do this? I guess that's the question. And I did a lot of reading online. I saw what other people are doing, and there's a lot of videos out there. There's a lot of ideas. I mean, and you should definitely go and watch all of them. But I will try to explain it to the best of my knowledge for what I'm trying to do. And as you can see, I mean, right here on the screen, I invested, $200 yesterday, actually. So that was yesterday would be the 9th, January 9th of 2020. All right. And and I'm already, looks like, about 33 cents down off of the $200, so 199.67. There's really not much data to show you here since I've only just started it yesterday. But hopefully within certain time frame we'll get to see these charts go up and down. Hopefully we'll see some gains, losses. I mean, that's kind of in a nutshell what we're going to do. But just right off the bat here, I mean, you see this between the 2 days, I lost 38 cents right off of the $200. You know what? That's the market for you. I mean, if you try to time it and buy stocks in perfect time, you either better know what you're doing, meaning you actually trade stocks, you understand the charts, you understand how this whole market works. Because in retrospect, most people will lose money that way, trying to wait for a market, for perfect, I guess, circumstances to happen. And hopefully within next year or two, I will have recorded plenty of videos to see this progress and to see how we, how this portfolio grows. Um, how it grows. But the whole point of this is really not to be focused so much on the losses or the gains based off of the stock prices. It's really to see how much we can earn in dividends from these stocks. So let me show you kind of what I've picked, and I call it major companies, because I went at least with the safe. Well, I don't know if you can say safe, but safer. So basically, the companies that have been around for a while, someone longer than I have been alive, and hopefully they'll be around for a while longer, right? Because to reap the benefits from those dividends, we do need these companies to be around for a while and make money and give us those dividends. Someone are gonna share those dividends quarterly, some annually, but some even monthly. But and I'm not really sure. I'm not the best judge. Which is best, monthly, quarterly, yearly. But it's, to me, from what I've seen so far, it sounds like the value you get is almost the same. I mean, you may get, I don't know, 20 cents a month from one company. You may get 60 cents from another company quarterly, and then you may get a $1.20 from a third company yearly or annually. So as you can see, I mean, all three of them gave you pretty much the same amount of money throughout the year. It's just how often did it actually happen. Perhaps the quarterly or monthly would be better, because then you can reinvest that money quicker as opposed to having that lump sum happen yearly. But I think that's really a personal opinion at this point. I'm not sure if there is any mathematical logic behind it, which is best, which is not best. But as you can see, I picked 3M. So I mean, this company has been around for a while. They do invent a lot of stuff, and that's what keeps them afloat. And today they're up 18 cents. So hey, not too bad. Pfizer, medical company, research company. They make all kinds of stuff for medicine. Up today 12. Boeing, again, makes airplanes, up 6. Home Depot up 1. So you can see that I haven't really stuck to one field. I just kind of went about, and I found all kinds of different market companies, because there is a such thing as safety in variation, I guess. I believe there's a fancy word for it, but you don't want to put your what's the saying, all your eggs in one basket, so to speak. So that's kind of what I did. I diversified. That's the word. I diversified this portfolio to include all kinds of companies. Hopefully, if one doesn't perform as well, the other ones will pick up because they're not in the same market. But we'll see how that works. And generally, you do get the understanding of what I'm trying to do here. So it's just Verizon, Target, JPMorgan, Walmart. I mean, Realty Income Corporation. That's the real estate. UPS shipping. Walgreens, waste management, Costco. I mean, obviously, and a lot of these companies I use. If not daily, probably weekly. So, since you're already spending the money and using their services, may as well see if you can get some, benefits from them. Because you are giving them money and making them profitable. So hopefully, they'll share some of that profit back with you. And I have added Coca-Cola and Six Flags Entertainment to this mix, but obviously I haven't deposited any money, so no stocks were purchased. But the way this the M1 financing works is, as soon as you put any kind of money, I think over $10, it will spread evenly based on these percentages that you've assigned. in here. So as you can see, I've signed 7.77% here, but this one went up to 8.1. But you get the point, right? So all right, so let's see. Okay, so let's see how you actually do that. I mean, right here. Well, actually, when you first click on portfolio, when you log in, you get this, my portfolio, how the market is behaving, and then you create these pies or slices, they call them. And if you click here and go to edit, here, what I've done is I've added all these companies and I've manually decided how much of a percentage of my money every time I deposit will go towards these stocks. And the good thing is, it will actually purchase the stocks, even though you don't have enough money for a whole share. It'll just slice those stocks and it'll give you, whatever you can afford at that time. And let me show you one example of that. For example, so 3M. Let's see real quick. 3M. So I initially gave them $16 and I got 0.08 of a share. And today's price, well, it's an ongoing event, but so far today is 181.91. So for 16 bucks, I got 0.08 of a share, or 0.09 if you want to round it up to the nearest. Right. So I mean, that's kind of what the idea here is to, pretty much just go around and see what we can buy or how much we can afford to invest into this portfolio, buy as much stock as we can, and whenever these dividends happen, to reinvest them back into buying more. I think that's general idea what people want to do with these things. So that's what I'm going to be doing. Oh yeah, I was going to show you how to actually, if you've never used the software, nope, wrong place. Let me go back into here, edit. And yeah, so if you wanted to add some companies, simply just come here and click add, and then you just search for, I mean, you have the filters right here on the left side, basic materials, communications, energy. I mean, then you can sort them by dividend yield. I mean, and let's see which one gives the most. So like right now, whoa, so look at these guys, Summit Midstream Partnerships or something. They have 320 million in market cap. They give 33.6% in dividends, which is unbelievable. But I guess, if you have extra money to invest in them, make sure that you're ready to lose the money. But if they turn out to be for real, giving these dividends, that would be pretty awesome. So let's see how good are they? SMLP. So I go to Seeking Alpha, SMLP, Summit Midstream Partners, and that's where I kind of go to do some of my research. So looking at their share, so their share is $3.30. So that's pretty cheap, and it's been going down since, wow. Hold on. Oh, this is 1 year. Yeah, but it's been going down a lot. Looks like it. Looking from the $12 down to $3. So that can be good. So something's up with this company. So yeah, you got to watch out for this stuff. I really wouldn't put my money in here. Their last dividend was 28 cents, and it happened on November 14th. They do it quarterly, as it says right here. But 5-year growth rate, I mean, it's negative. So I'm not really sure. I wouldn't put my money in here, but that's up to you. Let's see a dividend history. So they slashed their dividends. As you can see, at 57 cents they were used to give, but now it's 28 cents. So yeah, I don't know. It's a little shady. But anyhow, guys, that's what I would do. I mean, we'll get more into this as I make these videos, but that's pretty much it. Other than this, I hope you guys stick with me And if you want to see how I do, just please subscribe and like this video. And I will talk to you guys later. Bye for now.